Are you a newly fellow doctor about to start in private practice? Or maybe you're an experienced practitioner transitioning from public hospital system to become an independent consultant. And you're probably wondering, okay, what do I need to do now to manage my finances and tax? I'm Elena. I'm a specialist accountant and tax advisor for medical professionals. And now I'm going to run through the essential steps you need to take when starting in private practice. The first thing you need to do is to get your ABN. It's an 11-digit identifier that is unique to your business. Applying for an ABN is a relatively straightforward process, and it's free if you do it yourself. Go to the official government website abr.gov.au and follow the prompts. You will have to answer some questions to confirm your eligibility for an ABN and to provide your personal details as well as information about your business. Don't forget to have your tax file number handy before applying. If you're not sure how to answer some of the questions, you can ask your accountant to apply for an ABN on your behalf. Now, if you have a regular accountant or tax agent, avoid using any other third-party services to apply for your ABN. There are two reasons for that. First, your regular tax agent may lose access to your ATO records. And second, there are so many scams going around at the moment. You wouldn't want to disclose your tax file number to just anyone. Once you apply, your ABN will usually be available immediately, unless the government needs to do some further checks. If you're applying for an ABN as a sole trader, it will be connected to you personally. The number will always be the same, even if you change your business activity or if you cancel and then reinstate your registration at some point. You can run multiple businesses under the same ABN. Next, you'll have to determine if you need to register for GST. And for this, you'll have to work out your projected turnover. To calculate your turnover, you basically have to add up all your gross income from any business activity before deductions. And that includes your GST-free income. If you are going to be billing your patients for medical services provided to them, in most cases such income will be GST-free, but you do need to include that income in your turnover calculation. Make sure that you include your gross patient fees in the calculation, not just the amounts left after deducting your service fees. On the other hand, if you are going to be invoicing the practice for a percentage of your total billings, you only need to include your portion of the billings. If you expect that your GST turnover in the current months and the next 11 months will be $75,000 or more, you are required to be registered for GST. If it's less, GST registration is not compulsory, but you may still choose to register voluntarily. Registering for GST can be quite advantageous to doctors. Your income will not be negatively impacted at all, but you'll be allowed to claim back GST on all your eligible business expenses. This is why many doctors choose to register for GST, even if it's not required. If you are going to be practicing under a service agreement, where your practice charges you a large portion of your fees as service fees, registering for GST is always recommended. The only downside of being registered for GST is that you will have to lodge your business activity statement to the ATO. In most cases, lodgements are done on a quarterly basis, but if you are registered voluntarily, you can choose to lodge your GST return annually at the same time as you lodge your income tax return. The next step is to set up a good record-keeping system. It is always recommended that when you start in private practice, you set up a separate bank account just for business purposes. You should only use it to collect your business income and to pay out business expenses. Do not use it for any private transactions or transactions not related to your business activity. Having a separate bank account will help you and your accountant keep track of your business performance for tax planning purposes. It will also minimize your tax compliance costs by making it easier for your accountant to reconcile and process your records. Don't forget to keep copies of source documents for all income and expenses. This may include invoices, receipts, statement of earnings, and bank transaction records. Generally, there is a legal requirement to keep your records for at least 5 years from the date of lodgement of your tax return. However, in some situations, you may need to keep your records for longer. Now, do you need to have a proper accounting software like Xero to maintain your business records? Well, it depends. Of course, having an accounting software would be absolutely essential if you are going to reconcile your own billings or if you intend to employ workers. However, it's not for everyone, and for a lot of doctors in private practice, it's an overkill. For example, if you are practicing under a service agreement, or if you are a staff specialist exercising rights of private practice, using Xero may actually overcomplicate things for you rather than simplify. Especially if you are doing your own bookkeeping without good understanding of how the software functions in the background. Sometimes you are just better off with spreadsheets. You should discuss your record-keeping system with your accountant because each accounting practice has their own way of doing things. They might prefer you to maintain your records in a specific way to align with their processes. The next important thing to do when you start in private practice is to make sure that you put aside enough money for paying your taxes. When you have a salaried job, your employer must withhold taxes from your earnings and pay it to the tax office on your behalf, so you usually get a refund when you lodge your tax return. When you receive business income, nobody is withholding taxes from your pay. That means you are likely to end up with a large tax bill. So it is essential that you put aside a percentage of your business earnings to manage your future tax obligations. How much exactly do you need to put aside? Because we have progressive tax rates in Australia, there is no magic number to fit all. Generally, for most people, it's somewhere between 30 and 50%. The recommended tax savings percentage depends on a number of factors, such as your total projected income, whether you also receive a salary, if you have positively or negatively geared investments, and if you have any balances owing on students' loans. So what do you do with these savings? If you have a home loan with an offset facility, you can put this money on the offset account to minimize your non-deductible interest. Otherwise, you can open a separate high-interest savings account for this purpose. Whatever you do, do not use this money for any other purposes than paying your taxes, unless your advisor recommends otherwise. I know it can be tempting to spend that cash sitting in an account on a new car or on expensive holidays, but you must resist this temptation. Think of this money if it's no longer yours to spend. And last but not least, don't forget personal insurance. I'm talking about things like income protection, life insurance, trauma and TPD cover. If you already have an insurance policy in place, now it's time to review it to make sure it's still appropriate. If you don't have personal insurance yet, it's something you should definitely consider getting now. It will provide you and your family with financial security in case something bad happens to you. You might say, "Oh, come on, Elena, I'm young and healthy. What's going to happen to me?" Well, life can be unpredictable. Anything can happen. Let's say you're a surgeon. You break your finger and you're out of action for several months. And as a self-employed practitioner, you can't rely on sick leave or annual leave, but you still have to pay your mortgage and living expenses. When you're in business, you must protect your income-producing assets. And in your case, your most valuable asset is you. Like having car insurance or home insurance, protecting your income-producing capacity should be non-negotiable. And the good news is, if you're young and healthy, your insurance premium is likely to be a lot cheaper. But it's really important to make sure that the cover you have is right for your circumstances. Otherwise, it's a waste of money. But how do you know what's right for you? There are so many different options and policies that might be confusing. And you are a doctor, you are not an insurance product specialist, and you don't have time to do your own research about this stuff. This is where speaking to an experienced insurance advisor can help. The advisor will consider your situation, your risks, and the specific needs of your medical specialty, and they will compare many different insurance products and policies to find the most appropriate solution for you. And remember, you don't have to do everything on your own. We help medical professionals like you on a daily basis, and we're here to assist you with your financial and taxation needs at every stage of your journey.